You know, it's interesting because the constant and consistent messaging from OPEC is that they have the flexibility to adjust as needed. What is the appetite for change among the group, though? You also get the sense that these deeper cuts, if they do happen, might be pretty hard to stomach.
At the end, it's about stability in the market. Obviously, we can take a step back and say if OPEC Plus wouldn't have been in the market and tried to stabilize the market, prices would have been massively lower and we would have seen much more volatility. So it's a combination of factors. It's about finding a group agreement, but also being aware not to trigger too much supply to flood the market with barrels if the market doesn't want to see them. Definitely, it's not an easy decision at the moment. There are different indicators pointing in different directions, but we believe the market is undersupplied and the time will come that OPEC Plus can add barrels.
Let's watch and wait to see what OPEC does. Gio, also, while I have you, Libya has really been a headline market driver this week, and the situation on the ground there continues to move at a pretty rapid pace. What do you expect to happen next when it comes to the resumption of Libyan output, if indeed it does take place, and how is this impacting the market broadly?
Generally, on the second question, the impact so far has been muted, particularly as exports have remained supported until last Friday, but we have seen since the weekend exports come down. So it will tighten the oil market, in my view. I'm a bit surprised about the reaction on Tuesday on this Libyan story, considering that Libyan production stands still at lower level. It used to be 1.2 million barrels per day. Now it's at 300,000 barrels per day. And it's a tough decision to find a governor for the central bank, which decides how the money is distributed within the country. There are different interests in the country, so it might still potentially take a bit longer to find an agreement. But at some point, as we have seen in the past, production will come back because both parties need the money. But I'm not so sure it's an immediate return of Libyan barrels.
Yeah, so watch that space as well. And Gio, also, you know, on the supply side, we've seen a lot of headlines, but the demand side has also been a key driver here as well, particularly given the weak data out of China and concerns about the outlook for demand. So what's going to happen next with prices? Because we've also seen this week Goldman Sachs and Morgan Stanley lowering crude oil prices for 2024 and 2025. Goldman now saying $77 a barrel is the base case for 2025. So what's the UBS view and why?
We expect prices to move up to $80 or slightly above that level over the coming months. Essentially, as mentioned before, oil inventories are declining. Yes, Chinese demand has been extremely weak, but still it shows that supply growth is lagging demand growth. Otherwise, inventories wouldn't fall. And clearly here the picture is in countries like Brazil, where production growth has been expected, which didn't materialize at all this year. So it's not just that the demand has been mixed. I would still call it healthy overall, but there has been also disappointment on the supply side generally, and that keeps the market undersupplied, and falling inventories normally should translate in higher oil prices. Positioning is very low at the moment, and I guess if we get further reports like later today from the Energy Information Administration with inventory draws, then that should trigger a price increase.